Right. Good morning, everybody. So I've got a coffee, I'm ready to go. So the idea of today is we want to give you an update in terms of all the things that we know about the coronavirus from a business perspective, and updates that have been released by the government, just to keep you in the loop. So I've had loads of questions over obviously the last week or two. So what we're going to do is make sure everybody's aware of what's happening, what's obtainable. Obviously there's things going around about grants, lending, all that kind of thing. I understand that everybody wants to be sure of what they can get or can't get. So we're going to run through that today. There's going to be an opportunity for questions as well. We're going to do a bit of a Q&A at the end. So I'll keep that anonymous. So if you ask a question, I won't say who it was unless you specifically want to be known, and then I'll answer that to everybody, because I'm sure if you're asking it, somebody else is probably thinking the same thing as well. So feel free to ask any questions as we go along. I might not say anything until the end, but I might not answer it until the end, but please keep feeding them through, as we're going to do a specific Q&A at the end as we've gone through this. So again, if you can just put a note in to make sure you can hear me. I've had quite a lot of people already, but any newcomers, just to make sure that you can hear me, there's no issues with the audio and you can see my screen. And I'm going to start going through the slides. So the agenda for today is a bit of an information update in terms of what we're trying to do, to keep you in the loop. I want to touch on sort of cash management and forecasting. So obviously cash is sort of key at the moment in this time, personally and in business. The main one, which I'm sure everybody's going to be waiting for, is around the government funding. Then just looking at a bit of business strategy, the support that's on offer, and then a Q&A as well at the end. So we've got that within there. Okay, going through. Thanks for your comments, everyone, so that you can hear me. So I know I'm not talking to nobody. This must be what radio presenters feel like. It's very surreal. So a bit of an update. So we've been trying to keep you all up to date with our blogs and on social media as well. So if you go to our website, dhbusinesssupport.com, we've got a blog section on there. Anything that we find in terms of the most recent releases, we're going to put another one out on today. Now some of the government London has been confirmed, but anything that we find out, we're going to be putting on there as soon as possible. And we're only going off sort of what the government has actually said as well. So obviously there's lots of reporting around at this time, but we want to try and make sure that we're just waiting until it's validated by the government on what's actually happening. Obviously we're doing a webinar now to keep everyone updated. I'm going to be doing these more if necessary. So as we go along, if we feel that it's good and it's been worthwhile and there's more stuff released that it's easier to consolidate it into a webinar, and then I'll do so as well. And then we're on hand for call and email support. So obviously through this time, lots of people have got lots of questions. Don't be afraid to pick up the phone, give any of us a call. Our office lines are still working as well, with everybody working from home. And we're just organising the logistics of that, but then also we're all on email as well. So if we don't get back to you straight away, obviously we're working through probably a raft of questions. We'll get back to everybody as quickly as possible, but we are here through this time, and feel free to get in touch with us. One of the first things I want to touch on is around cash management and forecasting. So some of the things I've been saying to everybody is have a look at your business and personal expenditure. What can you get rid of? What are those subscriptions that are ticking along that you've thought for a long time? Maybe I should get rid of that, I'm not sure. Now's the good time to get rid of it, because you want to keep as much cash in your pocket as possible. One of the big things I know, for example, I was looking at is gym memberships at the moment. Obviously you can't go into a gym, so unless your gym is actually freezing your membership, then there's no point in paying for it if you can't go, and things like that. So I'd say go through, have a look at that, and be quite frugal with it to make sure you're getting rid of everything that you don't need. Reviewing payment terms with suppliers as well. So unfortunately, everybody's in the same boat. So if you go to a supplier and say, "Can I pay you later?" they're probably going to say, "Well, we need cash as well." But you never know. Some businesses are in different positions. Some have obviously got more cash reserves. So in terms of reviewing your payment terms for your suppliers, but also with your clients as well. So although you don't want to be the mean person in the room, if you say to everybody that yes, you've got 30 days to pay, then that's longer you've got away for your cash. It might be worth looking at doing a short-term reduction in your own credit terms to your clients and customers to say, look, I need to be paid a bit quicker. And everybody's going to be doing this. So everybody's in the same boat. So I think it's something that you've got to look at. Payment holidays as well. This is a big one if you've already got outstanding lending and things like lease agreements. So I would say make sure you go through, if you've got lending and you know it's going to be a struggle to pay it in terms of loans, don't be afraid to pick up the phone and speak to your lender. They're obviously, they have thousands of businesses in the same position as you at the moment, so they're going to be accommodating because they don't want lots of people start to fail their payments if not needed. And also the other thing is, if you've got things like lease equipment that you're paying for, then do the same. If you're going to struggle to be able to pay that, then don't be afraid to pick up the phone to those and say, look, what can we do? Is there payment holidays that can be made, so on and so forth. Everybody's in the same boat, so they're now making lots of accommodation to give people payment holidays, and lots of lenders already have that built in. So I know quite a few clients who deal with Funding Circle, for example. They already have a 3-month window built in, so this is before even a coronavirus specific payment break. So if you get in touch with the Funding Circle, you can usually get like 3 months a payment window straight away. So that's usually the method with most lenders, so feel free to give them a call. Also renegotiate your borrowing as well. So I'm going to come on to the government-backed borrowing. So what some people are looking to do now is obviously take out new funding to pay off other debts, because it's government-backed under that, and you might be able to get some better rates as well. But that's something to look at, or just try and negotiate a better term with your lender. Deferring any payments if possible. So a big one around this is VAT and HMRC, which I'll come on to. But if you don't need to pay it and nobody's going to sort of knock down the door, so to speak, then don't. Basically, just try and defer any payments you can. Keep the cash in your bank to keep the control, and then you could pay it when ready. And the big one that I want to highlight to everybody is, if you've got a direct debit set up for your VAT payments, cancel that. I'm going to cover this in the HMRC section, but basically HMRC have said that you are going to get a VAT payment holiday for up to the end of June. So that means if we did a VAT return between now and June and you've got a direct debit to go out, that'll go out automatically still. So make sure you cancel those VAT direct debits, because what you don't want is that going out if HMRC said you don't have to pay it. So I'll come on to the details around that, but just make sure you cancel in those direct debits, because you don't want cash to go out of the bank if it doesn't need to for that. And finally, the main thing I'd encourage everybody to do is to prepare a cash flow forecast. Now, these can sound much scarier than they actually are, and it can be a very simple thing, a sort of back of the fag packet type calculation. But the idea of it is that we try to work out if you're going to run out of cash, when that might be. And some of it's going to be unknown, but it's a case of saying, right, let's try and plan ahead for the next few days, weeks, months. And I'm going to, on the next slide in a moment, I'm going to show you an example of one, and I've got a template that I'm going to make available to everybody for download as well. So I'll send that out after this, along with some useful links as well. And you can actually use that template just to try and plan what's potentially going to happen over the next few weeks and months, to see if you are going to run out of money, and if so, how quickly. Because the sooner you know that, the sooner you can get chatting to things like lenders to work out, okay, what cash am I going to need, when am I going to need it. So this is the type of thing that I'm talking about, what a cash flow forecast looks like. As you can see, I've just put some dummy figures into here, but at the top it's a case of saying, well, what cash inflows have we got? We might have sales that are still coming through, we might have some loan income that's coming in, we might have some other income that's coming in. What do we need to pay out over the next few weeks and months? I've done this on a monthly basis. You can break this down into a weekly basis. Some people do it daily as well. So it depends on your needs, and you can change this for that. But yeah, you look at the outflows. What cash do you need to pay out? And then at the bottom, it's basically saying, right, okay, where do the red bits come in? Where do we go into the red, and can we cover that? So for example, on this example I've got here, this business would run out in June 2020. So it's basically saying, right, okay, we've got a couple of months now until we run out of cash. What are we going to do about that? What costs can we cut? In this example, supplier C has got a 10 grand payment. So you look and say, well, can we move that back? Can we defer that, put it on a payment plan? Can we get a loan in to cover that? Whatever it may be, it's just looking at the opportunities of making the cash work in your favor. So I'd encourage everybody to do this. It only has to be a simple thing. It doesn't have to be a big accounting headache. I'm happy to help people out with these as well. And like I say, I'll send across a template to you all on this webinar, so you can use the template and just work with that and put your own figures in. And I just really want to encourage everybody to take a few minutes to do this. because what I don't want to see is people running out of cash. Because if you're going to run out of cash, it's not a problem. It's not a taboo. It's nothing to be ashamed of. It's a case of, if you know about it earlier, then you can plan for it. The worst is getting to the end of a week and thinking, crap, I can't make payments. I've got a bigger headache now. You just don't want to be in that position. So I'll send this around. I encourage everybody to do it, and feel free to get in touch with us if you want help going through this kind of thing, because we want to make sure that you feel empowered as you go through the next few weeks and months. You're not going through it in the dark. Okay, so the big thing that's been announced at the moment over the last week or so is obviously a lot of government announcements for incentives and just general news as well. So I'm going to work through these main ones, and I'm sure you'll have lots of questions in terms of how they relate to your individual business. But what I'm going to do is go through now and just try and basically give you the information that we know as of this morning, give you all the information so you can start working with them. So the first one I want to look at is the business rates holiday that we've got on. So business rates holiday, basically the government have said that they're going to give a 12-month holiday for businesses in the retail, hospitality, leisure and nursery sector. So if you're in any of those sectors, and especially at the moment as well, if you've been closed down, then or the government has told you to close because you fit one of these sectors, and this is going to apply to you. They've also now broken this down and given a bit more of a definition. So they've said it's retail, hospitality, leisure and nursery sector, which also includes shops, restaurants, cafes, drinking establishments, cinemas, live music venues, venues for assembly and social assembly, leisure centres and leisure complexes, hotels, and guest and boarding premises, and also self-catering accommodation. So if you have a business that falls into one of these categories, then you are going to be eligible for a business rates holiday. Now, the government has said that there's no action needed. You do not apply for this. Basically, the local authority in your region will get in touch with you and say that this is the rates holiday that we're giving you for the 2021 tax year, and if you've already and they're talking now about what they're doing for the 2019-21 as well, because obviously we're in March and February just gone, businesses were affected then as well. So they're talking about, well, if you've paid something for them, there might be a way of getting it back. But what they've made clear is that you can't apply for it. They're going to get in touch with you. However, you can take reassurance that if you fit into one of those sectors or categories that I spoke about, I'll go over them again in a second in case you missed it, then you will apply for a business rate holiday. And what it looks like at the moment is that it's basically saying that for the next year, you won't pay any business rates. There's been lots of questions of, well, will this be rolled up? Will we have to pay it back? Is it effectively a debt? As far as I'm aware, and what I've seen, it's not. They're basically giving you a break. You don't have to pay it. It's a relief. It's not basically something that's going to accumulate in the background. So no need to panic around that. So just to define those again, it's shops, restaurants, cafes, drinking establishments, cinemas, live music venues, venues for social assembly, leisure venues and centres, hotels, guest and boarding premises, and self-catering accommodation. And so that's everything that falls under the business rates holidays. Grants. Now, this is a big one because obviously if HMRC's giving away free cash, then people want to get their hands on it, and especially if you're in a position where cash is tight. So I'm just going to run through this and the definitions of at the moment who we're fairly certain this does and doesn't apply to. So at the moment, we've got small business grant funding of £10,000 available for all businesses in receipt of small business rates relief or rural rate relief. Now, we sent an email about this yesterday, because 99% of small businesses who fall under the business rates relief, i.e., you don't have to pay any business rates, don't sign up for it, because what's the point? You're not going to pay it. What's the point of going through the legwork? However, what the government has made clear is similar with the business rates holiday, what I spoke about above. The local authorities are going to get in touch with businesses to make them aware that there are available grants to them and which level of grant they can get. You can't apply for this. Now, what this means is that the only way they're going to be able to get in touch with you is if you're on a register somewhere. So if you're just renting an office and you've not registered for the small business rates relief, then you need to do this as soon as possible, because that's how we feel they're going to be able to get in touch with you to offer you these grants. If you're not on that register, they're not going to be aware of you, and they're not going to get in touch with you to offer you this grant. So like I say, we sent an email around yesterday with that on. If for whatever reason you didn't see that or didn't get that email, let me know, and I'll just drop it in the Q&A section, and I can see that, and I'll make sure I email it to you directly. But basically in there, we've got a few steps on how to make sure you sign up for that with your local authority. The thing is as well, like I'm saying to people, is do this quickly, because it's not been broadcasted yet in terms of how you do this. So I think as soon as it is, then everybody obviously is going to be jumping on the bandwagon to make sure that they're signed up. All the local authorities are going to get very, very busy very, very quickly. And you don't want to go to the bottom of the pile, because it's just going to be a longer wait for your cash. So I would encourage everybody, if you're not paying business rates, but you are renting an office, and you fall under that business rates payable bracket, then sign up and get that. And you'll get a bill which just says you don't need to pay anything, but that means that you're on the register for that. So if you're under that business rates relief threshold, then it's around, well, it's up to £10,000 per annum, so 3 to 10,000. The criteria of where you fall into that, so some people have said, how much will I get? We don't know yet. They've not released that. I'm presuming it would be something to do with location in the country, type of industry that you're in, how much you're potentially paying in rent. But we don't know that until they get in touch with us. So it's going to be somewhere between 3 and 10,000. We've just got to sit and wait, or unless they release something in the meantime that we can pass around. One thing to clarify is that you have to occupy a property. If you work from home, you're not going to be able to obtain these grants as far as we're aware. So it's for businesses that occupy premises or rent a property that are going to fall into this category, because the grant is mainly there so that they don't then have lots of empty properties after this period, because everybody's moved out of them. They want it to be able to cover your rent, cover some of the other costs, but that's what it's for. So as far as I'm aware, if you work from home, you do, unless you've got a specific premises in your home, like for example a plot at the end of the garden, then that was built specifically for this and can be registered on the local business rates register, then you're not going to fit into this category, unfortunately. So the next one is the grant funding for up to £25,000 for retail, hospitality and leisure businesses, with property of a rateable value between £15,000 and £51,000. So the cap on this is the £51,000 of the rateable value. Again, HMRC have made it clear, and the government have made it clear that they're going to get in touch with you about this. So there's no way of fast tracking it. There's no way of applying for it. Unfortunately, we just have to sit and wait for them to get in touch. There's nothing we can do on that, unfortunately. It's just a case of sitting, riding it out. The government have made it clear they will be in touch, and they will confirm that it's going to be filtered through, but we don't know when, basically, on that. A couple of questions that have just come through, which I'll answer because they are relevant to this. One question: is there a way of seeing if you are already registered? Yeah. So if you follow the guidance that we sent through about how to register for this on the first link, I believe, if you follow that through and search for your business and your address, you should be able to see on there if you are on the list or not. If you're struggling with that, let me know and we'll have a look, because there's someone in our offices who's got very up to speed with all of this very quickly. But yeah, if you follow the first link that we sent through and look for your office and your business, you should see if you're registered on that already. Another question is it worth renting an office short term in order to get a grant? Good question. I don't know, to be honest, on what the criteria is going to be or when they're going to have a look at when people start to occupy these offices. So if you went out to rent an office today, and they saw that the occupation date was from today, they might trigger on and not pay you a grant. I don't know. If that's a risk you want to take, then go for it and see if you're going to get one. I just don't know at the moment. I would have thought HMRC would have brought some sort of threshold in, or time threshold, that if you rented an office after a certain date, you're not going to be eligible for it. But you never know, they might have missed that one. It might be a blip in the matrix, so to speak. So I'd say, yeah, I'm not too sure on that one. If there is anything that comes out, I'll let people know for that. The next one on the list, which is a big one that's come out, and this is actually live from today. So this has been confirmed as being active today, and people could start to apply for it. which is the business interruption loan. So this is basically, you're eligible for the loan if your business is UK based with a turnover of no more than £45 million a year. As far as I'm aware, nobody on this webinar has got a turnover of more than £45 million per year. However, it doesn't apply for anybody if you're above that threshold. The scheme is available from today. And let me just get the notes up from the British Business Bank of the finer details on this. So basically the key features are for this is it's up to a £5 million facility. So the maximum value of a facility or lending that can be provided is up to £5 million, with a repayment term of up to 6 years. So whatever you borrow, it's got a repayment term of no longer than 6 years, which is usual for most business lending, to be honest. This is a big one. There's an 80% guarantee. So the scheme provides the lender, so let's say in this case Barclays giving you some money, and with a government-backed partial guarantee of 80% against the outstanding facility balance, subject to an overall cap per lender. So Barclays, for example, NatWest, HSBC, all of the big lenders, I've got a list of some of the lenders I'll go through shortly. They have confirmed that each of them have got a pot that they're allowed to lend out. Obviously, all of these lenders are going to be very keen to lend this cash because they know that if it goes pop, 80% of it is backed by the government anyway. So what I would say is if you need this lending, get in quick, because obviously all these lenders are now going to be absolutely inundated with this, and it's going to be a case of first come first serve, because they're going to want to lend this cash, because to them it's free money basically. So I'm looking at it quite frankly, but that's how you need to go about it. These lenders are going to see the dollar bills going, they're going to want to lend it. If you need this cash, I would say get in there quick, because it's open as of today. And you don't want to hold back. The interest and fees paid by the government will be for the first 12 months. So this is where in the announcement by the government, they originally said 6 months. This has gone up to 12 months. So basically the first 12 months of interest are levied by the government. So if you take a loan over, let's say 6 years, you're only paying 5 years worth of interest. So it's very good. And any fees in relation to the setup of the loan as well. So lots of facilities have a setup fee of the nominal amount for putting it in place. Now the government's going to cover that as well. So there's no upfront costs to you as a business. The finance terms, like I've already stated, are for up to 6 years, and this covers loans and also asset finance facilities as well. So the main two that they're doing over 6 years is the loans and the asset finance. They're also looking at some shorter options, which only go up to 3 years, which are overdrafts and invoice finance facilities as well. So there are options where the government will back overdrafts and invoice finance facilities as well. Like I said, the security of this, it may be used for unsecured lending for facilities up to £250,000. Over £250,000, then you as an individual basically need to put up more security for this, which is usual, to be honest. So under £250,000, £250,000, as far as we're aware, there's no personal security that needs to be put up, and because of this 80% backed confirmation from the government on there. The main thing is that it's up to you to obviously pay it back. The government guarantee is only there if, for example, your business goes under and can't pay the debt, which we don't want to happen. So I'd like to state that yes, although this is government-backed cash, the onus is on you still to pay it back within there. Some of the smaller criteria that they've put in here is, number one, they've just recapped again that you can't have an annual turnover of more than £45 million. The second is that when you put a proposal in to borrow the cash, you have to submit a lending proposal, which basically just says, well, why do I need the cash? What's it going to be used for? The business is going to be able to pay it back, so on and so forth. Basically the eligibility for this is saying that were it not for the current pandemic of coronavirus, that you would actually still be considered viable by a lender. and for which the lender believes the provision of the finance will enable the business to trade out of any short-term to medium difficulty. So what this is basically saying that if we rewind a few weeks to before coronavirus and you look to put a lending application in before this whole thing kicked off, would your business still be eligible for lending? Would a lender lend money to you in an ordinary circumstance? And if in the unfortunate case that the answer is no and your business was on the decline, then they're supposed to say no. Now, whether they do or not, again, I'm not too sure, because the government is obviously backing this, so the lenders are going to be keen to lend. But just be aware that if you do put an application in, if prior to the whole coronavirus outbreak, you had a business that didn't look good on paper anyway, or didn't have a strong case as why you might need funding, then there is a chance that they might say no. But it's still worth giving it a go, I would suggest, because you just don't know at the moment. So they're the two main criteria, and it's open to all small businesses below that 45 million threshold. So it's not specific to a sector, it's not specific to a type of business. Their main criteria is that you're under 45 million pound and that your business was in a decent position before the whole thing kicked off with coronavirus, and that hopefully in a few weeks time or a few months time, whenever it might be, when this is started to dissolve, then it will still be in a good position and this loan is to see you through that period. Like I said, I really want to make it clear, if you want this loan funding, get in touch with your lenders quick. If the lenders come back and say, oh, actually, can we have this, that, and the other to help support the lending application, feel free to get in touch with us. Let us know. We can help you out, putting any information together if required, as most of it should be fairly standard anyway, but just let us know if you need that. But I'd like to reiterate, get in touch as soon as possible to make sure that this you don't lose out or get to the bottom of the list, because it's going to get very, very busy very quick. The next bit on here is around HMRC and the VAT and income tax holiday, and also the time to pay arrangements. So one of the big things that was announced at the end of last week on Friday was that between now and the 30th of June 2020, there's going to be an offer to all businesses that you do not need to make a VAT payment during this period. So this is where I was saying, cancel any VAT direct debits that you've got. Make sure no VAT payments go out of your bank between now and the end of June. You will have to pay it back. So if you have a VAT return during this period, which means that you're going to have to pay VAT during this period, or if you have a VAT payment due during this period, what HMRC have said is that you don't need to pay it now. We're going to give you a holiday, and you'll just be given until the end of the 2020-2021 tax year to pay back any liabilities that have accumulated. So as far as we're aware, that means that you're not going to have to pay that back until around about April 2021. So if you've got a VAT payment coming up in the next few weeks, don't pay it. They're going to give you until April 2021 to pay it. Now that might, depending on how long this lasts for, that might be extended further. They did make noises about the potential of that in terms of two things. One, the payment holiday going further than June 2020, and also the repayment of it actually being made back, going back further than April 2021. From what we know at the moment, this is it. So if it changes, we'll let you know. So like I said, do not pay any VAT across to HMRC. Even if you feel that you're in the position that you think, oh yeah, no, we've got a business, we've got plenty of cash, we can do this. My suggestion would be, don't spend it elsewhere, but just keep it to one side. Put it into a side account, something like that, because nobody knows what's going to happen over the next few weeks and months. So if you feel like you've got the cash to pay it to HMRC, don't pay it to HMRC. They've told everybody not to pay it to them, and they've given them a break. There's no penalties for late payment. There's no penalties for interest or anything like that, and there's no surcharges. So just keep it in your account, even if you earn 53p of interest out of it. It's going to do you more good than them. But this is where it comes back to the cash thing of keeping the cash in your bank account, because we don't know what's going to happen over the coming weeks and months. But make sure that equally you don't go and spend it on something daft, and then get to April 2021 and call them up saying, oh, bugger, I bought a boat or something, because I don't think they're going to take that too kindly if you do that. The second payment holiday that they've got is for self-assessment tax return. So this is a time period that confuses a lot of people anyway, but in terms of all taxes have to be paid at the end of each tax year by 31st of January. Now, one of the things that HMRC have confirmed is that the payment on account that you have to make. So in July 2020, coming up, there's a payment on account due for people if you've got a payment on account. If you're unsure whether you're going to have a payment on account or not, just let me know and I can clarify the details with you. But HMRC have confirmed that if you were due to pay a payment on account to them in July coming up, then you don't have to pay it. You can just wait until January and pay it at the usual time. Like I say, if you're unsure on that, feel free to give me a shout. But the same with the VAT, I would encourage everybody not to pay that. Even if you've got the cash to one side and even if you feel you can pay it, keep it to one side. It's better in your bank over the coming weeks and months. So you've got it as a bit of a backup within there. Also, one of the things that HMRC have done is they've really scaled up their time to pay agreements, which is basically a payment plan. They call it time to pay arrangements. If you hear that term, it's just basically a payment plan if you've never done one before with HMRC. So what this means is that if you've got things like PAYE, one of the things they've not made too clear about is the PAYE at the moment. I want people to still pay that if possible. But what we encourage people to do is if you have a debt already outstanding to HMRC, as in from prior to the last few weeks that you need to pay them and they're chasing that up, or if you start to accumulate a debt over the next few weeks, then feel free to call them up and basically say, look, what can you do me in terms of a payment plan? So previously HMRC used to like debts being paid within 12 months. They've confirmed that they're going to extend this out further now. So they're not going to try and get everything in within 12 months. And they're going to be quite lenient on a lot of the charges and penalties as well. So now is a better time than any to get a payment plan in place with HMRC, especially if you had an accumulated debt from before the coronavirus breakout. That you've been carrying forward, I would say maximize this opportunity to get it onto a debt payment plan with HMRC. Also, one of the things that we've heard is that HMRC have now stopped sending anybody out to offices for debt collection for the foreseeable. Two things. One, because they realise that if they start closing down businesses in this period, it's going to be very bad press. Secondly, obviously due to health and safety reasons of coronavirus and contamination, so on and so forth. So the good news is if you did have HMRC hot on your heels and you were in that position again before this, the good news is that you're going to have a bit of a break, to be honest. So that's not to say that they're still not going to process snotty letters and try to scare you that way. But they are giving everybody a big break in terms of debt collection. That's not to say that once we've got through this process that if you do have a debt outstanding to HMRC, it's not going to disappear, but you've got a bit more of a payment window to actually pay it and set something up proper with HMRC within there. But like I said, everything else, if I was you and you've got VAT or income tax coming up, don't pay it, keep it in your bank and just put it to one side. Don't pay it unless absolutely necessary. So the next thing we're just going to go on to is the SSP statutory sick pay. So statutory sick pay, this is one of the first things to be announced in terms of last week in terms of the daily announcements from Boris Johnson, which is a side note, if you're not listening to those daily announcements, I'd really encourage you to do so. It's around about 5 o'clock each day. You can get it on iPlayer, Sky News, things like that, because it covers all of this and any new announcements. Back onto SSP. So SSP, as far as we're concerned at the moment, covers up to 2 weeks pay per employee if they've been off due to coronavirus. So the HMRC are not saying that they have to have a certification from the doctor or anything like that. So obviously there's been a ban as much as possible on people venturing out to the doctors or even calling 111. There's been a disencouragement to call 111 if you think you've got coronavirus, just to ride it out. So basically it's a self-certification at the moment. So if you or any of your employees think that they've got coronavirus or need to be off to self-isolate, then they fall into this SSP category for that. It's only for businesses with fewer than 250 employees, and that's as of the 28th of February 2020. So we should all be okay in terms of this. Employers will be able to reclaim any expenditure for an employee who has claimed SSP, and HMRC confirmed that. What they've not yet confirmed is how that's actually going to happen. So from seeing this type of thing before, I would presume that HMRC are going to do it as a deduction in future PAYE payments. So when you make your PAYE national insurance payments at the end of each month, I'm presuming they'll deduct it from that. However, they've not confirmed that officially yet. And their only guidance is that you should maintain a record of staff absences and payments of SSP, but you do not need a GP's fit note, so that's fine, to come back into work. Also, the mechanism for employers getting this back will be confirmed as soon as possible. So that's what they've said. So they've said that you'll get it back, but they've not confirmed when. So if you're wondering whether to pay out SSP to employees, or if you have paid out SSP to employees in relation to coronavirus, you will get this back, but we're just not too sure when, basically. I was speaking to somebody yesterday and they said a member of staff has just gone off because they had an illness which wasn't coronavirus. Could they still claim back on the SSP? And I said, well, obviously that depends what you put it down to in your own record keeping. As I said, this is self-certified. So HMRC, I can't imagine they're going to go through and double check every single person that it was coronavirus related illness or absence. So I'll leave that up to you to decide what you want to do with those type of records, but I just want to confirm the information that I do know. Moving on now to the job retention scheme. So the job retention scheme, this was again massive bit of news, which was released on the on Friday, just before the weekend, basically saying that they're going to effectively pay you to keep your employees employed rather than laying people off. So as far as we're aware at the moment, this is the official government announcements on this. Every single business, every UK business is eligible for this. There's nobody that falls outside of this category at the moment, no matter how big or small. Designated, now you're going to have to forgive me to how to pronounce this because I keep forgetting of how to actually say it, but designated effective employees as furloughed workers, I'm going to go with that for now for the purposes of this webinar. So forgive me if I've just butchered that, but we're going to go for furloughed now. Anybody that's affected as a furloughed worker, which is basically a leave of absence. So if you've told them not to work because there is no work to do, that's how they fall into that category. And you've notified them of this change, and that's effectively a change of their employment status, then that's how somebody falls into this job retention scheme. So as far as we're aware at the moment, if you still have staff that are working from home, earning the business a revenue, then they do not fall into the job retention scheme. It's only those staff that you've clearly made it to them that actually, look, you can't work. There's a change of status to your employment, which has to be agreed by them as well. So they chucked in a HR bit on this. So it's always worth chatting to your HR advisors on this. And we've got a HR advice line, which again, you can tap into if you need. We emailed it out recently. Because it's a contract change to their employment contract. But if they're still working, then as far as we're aware, you're not going to get any money back for this employee. It's only if they've been classed as furloughed workers and they've been laid off for the time being. In terms of how we actually get this cash back, you have to submit the information to the HMRC about the employees that have been laid off and their earnings through a new online HMRC portal. As of yet, nobody's got access to this portal, and we don't know what questions they're actually going to ask within there. HMRC will reimburse 80% of workers' wages up to a cap of £2,500 per month. Now that's £2,500 gross from what I can read between the lines. So there may be some tax and NI deducted from that from the employee's actual net pay. But it's £2,500 gross. HMRC are working urgently to set up a system for the reimbursement, as there is no existing setup. There is no existing facility set up for this. And the key thing that they've also said is that there is no time scale for reimbursements. So one of the big thing that the government was saying that if you've basically got staff that you're effectively going to let go because you can't afford to pay them, the government was saying, actually, well, no, keep them on and pay them because we're going to pay you back. The problem is we don't know when we're going to get paid back. So this is a biggie that comes into your cash flow, and how you want to play it. Because I've already had questions of, well, do I borrow money to pay staff to then get it back from the government? But then is there going to be anything interest and that kind of thing to pay on the funding? Obviously, if you use one of the government backed lending, then no. But it's a biggie. The timescales, we're not sure at the moment. I'm hoping that they will release something this week on the timescales, because obviously that's going to be a massive one asked by everybody of saying, look, it's great giving us a promise that you're going to pay us back, but if we don't know when and we're paying out wages for another 2, 3, 4 months, obviously if we've not got cash coming in, we can't physically pay for that. So it's great on one hand, but we're still waiting for the finer detail on this. And what we're also not yet sure of is around the criteria for directors on this. So businesses, if you're a director of your business, or you've got other people who are directors and not necessarily shareholders, and if they are a shareholder, what the criteria is around that or not. We're just waiting to see some further detail on this and how it works out. One of the questions I keep being asked is, well, saying actually, look, if my employees are not actually put on hold and they're still working, what's basically how HMRC are going to police this? We don't know at the moment. Again, they're submitting a portal for you to upload this, so you could lie through your teeth and say, well, everybody was laid off, and in reality nobody was to try and get that back from HMRC. How they're going to police this, we haven't got a clue. So yeah, I think it's going to be a case of, yes, there's probably going to be lots of cases where people are claiming cash where they didn't necessarily need to, but unfortunately, due to the volume of what's going on, I can't see how HMRC are going to get around every single business and sit down with everybody and actually work out what happened or what didn't happen. So as soon as we get some more details on this, we're going to let everybody know. But HMRC have confirmed that they're going to cover up to 80% with a cap of 2,500 per month of these workers that are effectively laid off or due to be laid off. So that's what this is for, to keep everybody in employment. So once this all sort of blows over, that there's not lots of people looking for jobs within there. I've seen a flurry of questions coming through on this. So what I'll do is I'll come back to you on those at the end, and there's quite a few, so I'll detail those at the end of the Q&A. I'll just rattle through the other bits that we've got first. The next on the list is the around self-employed. Now, very sadly and unfortunately for self-employed, my list of notes on this is pretty short. There's not a lot of support at the moment for those that are classed as self-employed sole trader workers. So if you're not a limited company, for example, so if you're a limited company or an employee, there's obviously quite a lot happening as detailed above. If you're a sole trader or self-employed, the main thing that HMRC have confirmed to do at the moment is they're going to give you a more beneficial rate on universal credit, which is around about the rate of statutory sick pay. So it's about £90 odd a week. So obviously it's not a lot of cash. If you are in the position of being self-employed, I would say still go through the process, because any cash you do get is better than nothing. However, please take into account if you've got a partner, husband, wife, partner, whatever it may be, then the status of their work needs to be taken into account, because obviously with universal credit, if they're earning a certain amount per year, then that's going to reduce what you can claim, even though you're classed as self-employed sole trader. So unfortunately, the scales are tipped against you slightly at the moment. And I'm hoping that there's going to be a pressure on the government to obviously change that. So that's what we're waiting to hear at the moment. But as far as we're aware, the only main benefit for those who are self-employed falls into the universal credit system. So universal tax credit. So get on, apply for that. As you can imagine with everything else, I can imagine their offices being very, very busy over the coming weeks. So I'd say get in touch with those as soon as possible. And finally on there's the HMRC coronavirus helpline number. So HMRC have put that out. If there's anything you want to speak to them about in more detail, if you want to ask them any fine questions, so on and so forth, then you can do, and about time to pay arrangements, anything that you might have for them that you want to speak to, then that's the number that they've put out to specifically help people through this period. On there. So I'll give you a second just to jot that down if you've not already. Okay. Just outside of that, one of the things I wanted to talk about was other funding options. So people have said to me, okay, outside of that, what's my other options of getting cash? Because obviously the government stuff might not come through that quickly. We certainly know it's not going to be here within the next couple of weeks, except for the government-backed lending, which has been released today, but you've still got to go through a lending application and go through all of that. So there's a couple of other types of lending that are out there and that we've been involved with, but also they come with some preconceived rates of interest, things like that. So it's a case of just watching out what you sign up for. So there's a couple of facilities, for example, that we've helped clients set up recently, two for about £15,000, where they were very quick and easy. And you've got lots of lenders out there that do this type of thing, like iWalker, so on and so forth, which are very, very good. You can get cash in your bank within a matter of hours. The only downside is that it's a lot more expensive than your typical type of lending. So usually they're payable back over no longer than 12 months, and they accumulate their interest at around about sort of 4 to 5% per month. So that's why it can be a bit more expensive. So it's fast, it's very convenient. So if you need funding in the short term, and you think, right, okay, we're going to be okay in the long term, but I need some cash quick in my pocket, then there are facilities out there. And if you want to know more about those specifically, let me know and I can put you in touch with some. But the caveat is, yes, it's expensive, and you will most likely be signing a personal guarantee against it as well. That's how they work. There are longer terms available. Now, obviously, this fits in with the Coronavirus Business Interruption Loan Scheme as well. So basically the government-backed lending. And I would encourage you to speak to your lenders or your bank about that. So I'll send out a list. I've got a list actually, and there's a list on their website as well, but I'll send this out to everybody who's on this webinar after. But just to give you an idea of the types of lenders are on here. So you've got Barclays, NatWest, HSBC, Lloyds. You've got some of the newer banks on there like Metro Bank as well, if anybody's with Metro Bank. So there's lots of lenders on there, and they're trying to add some more lenders onto it. So I'll send around this list. If your bank's on there, then I'll say you get in touch with them very quickly. If your bank is not on there, for example, if you're a bit of a quirky bank and they're not eligible for this yet, then if you go to one of the other lenders that are on there, they're not going to turn you away. They're going to want the business. So the longer terms are available, but they take a little bit longer for that. You've got other types of lending at the moment. So, for example, sort of invoice finance facilities. Personally, I've always encouraged people to steer away from these if possible anyway, because it's one of those traps that once you're in it, it's a vicious cycle of you need to keep financing more invoices to keep paying it off. But they are there if possible. And what that basically means is that you have debts outstanding to customers, and people will pay you money based on you calling that debt in at some point and being able to pay the lender back. So it's useful for a time for certain businesses, but I would encourage you, if you can get another lending option from a personal perspective, then do so. And again, on that, you'll have to provide either personal guarantees or company debentures, because they like a lot of security on that as well. So there are other types of lending out there from what we've talked about, especially from the government-backed stuff, and if there's going to be a grant available to everybody, and there's some shorter, fast-term lending. If you need cash for the next few weeks, and then you know you're going to be able to pay it back because you're getting a bigger loan from one of the banks or something, there is that option. And let me know, because if you take a loan out with somebody like iWalker, for example, for a period of, I don't know, a couple of weeks or 2 months or something, it's not that bad. It's once you start to escalate it out over a period of years, that's when you start to get really expensive. So if you want updates on other type of funding options, let me know, and I'm happy to chat that through with you. So just let me know. The next one I just want to touch on before we go into our Q&A is around just business strategy. So what quick wins are there for you to do? So on this, I was looking at basically cutting out any non-essential costs. Can you do a cash flow forecast? And if you need funding, get that funding in place. So this is a great opportunity to review business you're spending. What quick wins can you do to get things in place? Also looking at new revenue streams. So especially we've got clients who are restaurants, so on and so forth. Obviously everybody's becoming a takeaway nowadays, because you're allowed to facilitate takeaways, but you're not allowed to run an actual restaurant where people come and sit down, or a cafe, so on and so forth. So it's having a look at how can you use your current facilities, what you have, the staff that you do have, rather than sending everybody home. Actually, can you do something a little bit different that's going to generate you a revenue and keep cash coming into the business? So I'd encourage everybody to look at that. Also, over the next period, it's going to be an odd one, but it might mean that you be a bit quiet. Some businesses might be a bit quieter. So I'd encourage you to keep working for as long as you can. If you've got any work projects that you're still able to do, carry on working on those. So work's ticking along, and also use this downtime to catch up on anything that you've been too busy to do before. So if you've got all that stuff piling up in the back and you've managed to secure your cash position, then make sure that actually, is there anything that I can improve in my business? So once we get out of this period and everybody is trading as usual, you're really ahead of the game and you say, yeah, I've got everything sorted out that I've been sitting on for a long while. Or it might just be a fact that you want to do some decorating around the house. I'll leave that up to you, but I'd encourage everybody to use this time well. While lots of businesses are quieter than normal due to the lack of trading, to really get on top of things that you'd otherwise be too busy for. Some of the support that we want to keep giving you is, like I say, just to recap, around webinars, blog and email updates, phone calls if you need them, and also email support. So I just want to clarify that we're here. Most of us are working from home now, and we're around. And so bear in mind, some of us got kids and that kind of thing if you hear anyone in the background, but we are here. And we're here to support everybody through this time. And as soon as we hear anything, we'll keep updating those keep updating those blogs, sending out emails, doing webinars if necessary, to keep you in the loop with what is happening over the coming weeks. So I'm just going to go now on to some of the questions. So if you've got a question, feel free to fire it in there. I'm going to rattle through. I've got a few that have accumulated as we've gone along. So I'm just going to go through those now. So let me just digest a couple of these. Okay, so one of the questions was, what about existing debt collection referrals? So if I'm presuming this is where a debt has been passed out to a third party. So HMRC, when collecting debts, can pass it out to a third party debt collector to collect that debt. As far as I'm aware, they're going to take a similar stance to HMRC, where they down-tune their efforts slightly. However, they're in a different position, that they're also an independent business who wants to be paid, and they get paid if you pay your debts. However, as far as I'm aware, when people have spoken to them at the moment, they've been quite accommodating. So I'd say give them a call and just say, obviously, this is the position we're in. What can we do to basically either get a very favourable payment plan in place, or can you just put everything on hold for a couple of months, then give me a call back and we'll see where we are. So one business I was working with last week, they actually spoke to one of these third-party debt collection agencies, and they just said, look, don't worry, we'll put the file on hold for 60 days and then we'll get back in touch with you. Now that might depend on which debt collection agency you're working with and or the amount of debt that you've got outstanding as well. So I would say just give them a call, see what they say. SSP with limited companies and one employee, i.e. if it's one employee who is the director. Very good question. As far as I'm aware at the moment, company directors fall into the guidelines for SSP as well, as long as you follow the process and document it along with everybody else. So as far as we're aware at the moment, that's people are falling into that criteria. Within there. And if you're unsure of how to actually process that, or if you do your payroll yourself and we don't run your payroll, then let us know and we can help to make sure that that's processed properly. Is there a minimum employment time for employees to be eligible for SSP? Good question. So as far as we're aware, they've not changed any of the criteria for this, or they've not put a criteria around this in terms of time. I've not seen one as far as we're aware. So I'm not 100% sure of that question, to be honest. I was asked this a few days ago and I had a look, and HMRC haven't put anything out to say that there is a minimum employment time. So in effect, you could have employed somebody yesterday, or not yesterday, but let's say Friday, and then tomorrow they go off on sick leave because of coronavirus. In theory, they would fall in line with SSP because the government have said that this covers any employee with a coronavirus related illness. So until they release some of the final documentation of how to get that cash back, I'm presuming we're not going to find that question out. Yeah, well, we'll confirm that. Okay, so what if you have asked staff to take a holiday since there is no work to do? Can we still get the government to pay us back for that? Good question. So the criteria for the government at the moment is they're saying that it's basically for only workers that have been basically can't even remember the name of the word now. So I've had that much going on recently. Flawed. Yeah, there we go. Flawed workers. So if you class them as flawed worker, now they said on there that you've got to have basically a confirmation that you've been in touch with them, changed their terms of their contract and said, look, for the time being, you're off. So if you've just told somebody to take a holiday and they're taking holiday leave, as far as I'm aware, that wouldn't fall into the criteria. Now, you might choose to go back and retrospectively change that to make sure that they do fall into the flawed category. Otherwise, obviously, you're gonna miss out there. So I'll leave that for you to decide. But as far as I'm aware, if somebody's just taken holiday, then they don't fall into that category where you get the 80% paid. No. Good question. Would it apply if we have to reduce staff hours? So this is one of the things that we're waiting for the finer detail on. So it basically, does it work on a 50-50 type basis or something similar? So if you're employing somebody, so let's say 30 hours a week at the moment, and you drop their hours down to 20 hours, is there a case for the member of staff to say, well, what about that 10 hours I'm losing out on? Is that going to be covered by this 80% from the government? As far as we're aware, we're not sure at the moment. It was a question that was asked and they've not confirmed it because they've just said at the moment it applies for people that have effectively been fully laid off or about to be. Whereas if it's part and reduced hours, they've not confirmed that. So I'm not 100% sure. As soon as you get some more details on that, I'll let you know. Charities, any idea what might happen here about charity? We have charity rate relief. Good question. They've not really said much about charities, to be honest. They've mainly focused on businesses. So the question was asked on Friday after the announcements, what's happening with charities? Do they fall into the same categories, so on and so forth? And they were quite vague. So unfortunately on charities, I've not really got a lot to offer. We need to, we just need to keep our head to the ground on that one and let you know what's going to happen, especially in terms of the grant funding and things like that. Because like with businesses where they're losing revenue, obviously lots of charities are saying, well, all our donors are not donating at the moment. What do we do with that? So yeah, as soon as I hear anything on that, I'll let you know on there. Yeah, so good questions about directors' eligibility for job retention scheme, saying that I'm only on the payroll on the PAYE scheme, so shouldn't that make my wages eligible? In theory, yes. However, in these types of things in the past, they'd sometimes like to leave directors out for some unknown reason. So we don't know the detail on this yet. So that's what we're waiting to hear in terms of directors and or director shareholders of businesses who are on the payroll. How does that work for you, basically? So as far as we're aware, you should just fit into the same process as everybody else, as long as you fit the category that you've been flawed, basically. As long as you fit into that category, then you should be eligible. But that's what I'm just waiting to hear, because lots of people are on the scheme where you take directors' dividends. So let's say circa £700 a month. Sorry, director's salary at circa £700 a month, and then the rest is dividends. So I've had lots of questions saying, well, actually, should I put my all my dividends for a salary and class myself as flawed, and then claim that back from the government? On one hand, that sounds like a great idea, but the problem is we don't know what the government's going to do, because obviously they might twig on to this, and all of a sudden lots of directors start to increase their salary payments through PAYE, whereas usually they're very small, and then they have a higher dividend payment for tax efficiency reasons. But they might bring something in to counter that. So I'm not 100% sure on that. I can't say for that, which is why there's a bit of a grey area around director salaries, specifically because lots of people work in that way. If we've started the redundancy process already, can we stop this and go through the FLAW option, or is this a HR question? Great question. I would have thought you should be able to stop and unpick this. Depends on how far you are down the line, but I'd suggest it's more of a HR question, because depending on where you are in the process, you need to check, obviously, can you actually sort of stop the cogs turning and wheel it back so that you're not making them redundant any longer. put them into floor, and then claim that back from the government. So in theory, I would have thought the answer should be yes, because it's in the government. The reason the government have done this is they want to keep people employed. They don't want people to be made redundant. So if you started the process, depending on where you are, I would have thought I can't see the government having any qualms with you turning that back, because this is exactly what their proposal is for. However, from an HR perspective, you might have to jump through a few hoops. So I'd suggest speaking to the HR specialist about that to make sure on that. Good question in terms of saying, what if we're now effectively trading as insolvent as a director? Can that have any knock-on effects to if the business was to go under? Are we going to be penalised personally, so on and so forth? Good question. I think within here we've got room if the business, if you had the business that was to go under and you knew you'd been trading insolvent for a period of time, I think within here we've got guidance from the government to keep paying staff, so on and so forth, to try and keep the business going as long as possible. So as long as you're running your business sensibly and making sensible decisions over the next few weeks, then I can't see why there's going to be any repercussions for that, even if unfortunately the business did go under and you had debts within there. But what I'd make clear is that if the business was struggling before the coronavirus problems, and it's going to struggle even further now, then what you do need to ask is actually, have I got a viable business going forward? Because if it wasn't that viable before, is it going to still be viable after, regardless of this whole situation? Good question. Should I be paying myself SSP or under the job retention scheme? Good question. Basically, the SSP only gives people around about £90 per week. The job retention scheme is going to cover 80% of salary. So effectively, somebody being paid on the job retention scheme is going to be paid more, depending on what their salary was, rather than on SSP. So if it was me, I'd probably steer you in the direction of the job retention scheme, it's backed by the 80%. The like with the SSP, though, is obviously we don't know when that's actually going to be paid back by the government to businesses. Okay, we've got a good question in here. What happens to a business who has lost revenue due to a reduced client base as a result of social distancing? So we're talking about barbershops, hairdressers, etc. So if you fall into this category, then there's two things available to you. There's, if you occupy premises, so if you're a barbershop or a hairdresser, then I'm presuming you're occupying a premises, then there's going to be the government grants available to you. Now, like I said, unfortunately, we don't know the timescale on when these are going to happen, and the government is going to get, and the local authorities are going to get in touch with you about that. So that's what they've released, number one, in terms of they are going to give you a grant of some sort based on your rateable value. Secondly, the loans. So if you feel that actually, yeah, we've got a reduced turnover, we've still got some overheads that we want to fulfill, and if we take, pardon me, if we take out a loan, then we're going to be fine in a few weeks' time or a few months' time, whatever it may be, then you can take out one of the new government-backed loans and apply for those. And then also with the job retention scheme, if you directly employ people, whereas a lot of hairdressers and barbershops won't, because they have an agreement with people who are self-employed, but if you did employ anybody directly, then they could then fall into the job retention scheme, because you could class them as flawed, lay them off for a period of time, and then you could claim back 80% of their wages. Unfortunately, outside of that, there's nothing else at the moment. It just fits into that criteria of, if you've lost your revenue, the three main things government are doing is giving you a grant, lending you money, or making other people lend you money, and they're gonna back it up, and they're gonna pay for your employees if you can't afford to pay for them as well. So I think we're nearly at the end of the questions. Let me just have a look. I think there might have been one that I missed. Let me just double check. Okay, good question. So what about employees that are either on a 0-hour contract or before or below the lower earnings limit? So if they're below the lower earnings limit, they're still on the PAYE scheme. So even if somebody doesn't have PAYE deducted from their payroll, i.e. they earn less than, for example, 12 grand a year, and they don't pay any PAYE or national insurance, they still fit into the PAYE scheme, because as an employer, you'll make a submission that says, these are my employees, this is what we're paying them. Oh yeah, Joe Bloggs, they've not had any tax to pay because they don't earn enough, but they still go through the payroll system and the PAYE system to the HMRC. So they fit into that. Now the question is around 0-hour contracts. We don't know yet. So it's been said, how are they going to be worked out? Because if somebody's on a 0-hour contract contractually, as per the new government's guidelines, then they're not going to get anything. However, what they might look to do is try and work out an average over the last period of time of what somebody's worked and do it on a fair basis like that. That's just my sort of guesstimate. I don't know yet. But if somebody's on a 0-hour contract, we don't know the criteria on that at the moment. We're waiting to hear the finer details on that. Let me just see what if I've got. Good question. Somebody's asked about previous debts owing to HMRC, or previous payment plans that you might have to pay to HMRC, or if you're currently working out what debt you owe them. So this one is in relation to benefit in kind. So somebody's got a benefit in kind liability going back a few years, because there must have been a mix up with the P11Ds or the submissions. And then you're calculating what you're going to owe to HMRC, and then I presume put a payment plan in place. My suggestion would be to still work out what you actually owe them, because you're going to need to know that anyway, regardless of this, and then work out a time to pay arrangement with HMRC. So if it works out, yeah, we've calculated this and we owe you £10,000, for example, due to unpaid taxes for miscalculations previously, then what you're going to need to do is still work that figure out, and then once worked out, then you can have a discussion with HMRC to say, well, look, we obviously owe this money, this has happened, what can we do in terms of favourable payments to make this work for everybody within there. And one final question that's just come up following on from the barbershops and hairdressers one. So I'll probably go fairly soon, but if you've got any more questions, feel free to drop them in after I've answered this one. So obviously it's a bit confusing around businesses and barbershops, such as barbershops and hairdressers, who are still operating even though they invade clients' personal space. So there's not at the moment been a call for places such as hairdressers, barbershops, so on and so forth, to close, as there was last week, where they made it very clear that social gathering spaces, gyms, cafes, restaurants, so on and so forth, should close. And businesses which have close, what I'd call intimate contact with somebody, in terms of very close contact, obviously cutting hair, so on and so forth, then at the moment, they've not put those types of businesses in the criteria, as they have with those businesses that are like social gatherings, so on and so forth, pubs, restaurants. I'm expecting them to do something, because those businesses are going to be more affected than those other businesses that can just go home and work from home, for example. So I'm in the fortunate position that I can, as long as I have a laptop, I can work from either the office or at home. Whereas if you're cutting somebody's hair, then unfortunately you're not in that position. And the government haven't released anything specific on those types of businesses yet to say that there's going to be something over and above other types of businesses. So unfortunately, I've not got a lot to offer, and it is slightly confusing. One of the things I would encourage you to do, though, is speak to your insurance companies about potential loss of business, because up until now, insurance companies are obviously trying to back out of everything until the government says, right, lockdown, everything's closed, and then it's out of your hands anyway. However, now, because the government have strongly advised people to stop doing things, they have started to close businesses, so on and so forth. There's now an argument against insurance companies to say, well, look, we've got a loss of revenue. What can we do? What can you give us, type of thing. So yeah, unfortunately, I've not got a lot else to add on that. I would just say speak to the insurance company to see what they can do within that. Final question that seems to come through. What if you have had work postponed or cancelled, which has left your bank balance low, and it doesn't leave any funds to pay bills, so on and so forth? Is there anything that we can do for this? So following on from the last question, number one, I'd say, yeah, speak to your insurance company. If you've got loss of revenue, that's the thing to do. Speak to your insurance company and say, look, what can we do around this? And then the next thing is running that cash flow scenario. So if you've got a very low bank balance at the moment, then run that cash flow scenario. Say, okay, well, what have we got committed to go out over the next few weeks? What can we postpone? What can we cancel? What potentially might we be able to get in? And then what we want to trying to have a look at is when might the curve of cash coming back in pick up again, and then try to then apply for some sort of funding or a loan or something like that against that if you think that's viable to do so. So yeah, that would be my advice: is run the cash flow forecast, speak to your insurance company, and then have a look to say, right, okay, what amount of cash do we need to get through this process to get the business through, and then you can apply for that. Okay, so I'm just having a look. So I don't think we've got any more questions now. If there's anything that you want to ask that you've not done so on here, feel free to drop any of us an email or a phone call, and we'll get back to you as soon as possible. Within that, I just encourage you to try and keep positive. Obviously, over the next coming weeks and days, everybody's in the same boat. Nobody knows what's quite happening. Which on one hand is a fortunate position for us, because if your business is struggling, you're not the only one struggling. There's obviously going to be lots of people in the same position as well, which gives you more power, so to speak, with people like lenders and suppliers and so on and so forth, because everybody's in the same boat. It's not just you struggling on your own. And so I'd encourage you to speak to people, speak to lenders, speak to staff, keep it open and honest, and ask any questions of those, and we'll try to answer it as best as possible. So yeah, that's I think that covers everything. Like I say, we might do another one of these as more information comes out in a couple of weeks or a week or something like that. So I don't want to do them unnecessarily, but what I do want to do is consolidate any new revealing information that's going to be really useful for you to take away with. So yeah, if information keeps trickling out from the government, then I'll put another one in a week or something like that. But in the meantime, keep an eye out for our blogs, keep an eye out for the newsletters that we're sending out and emails. Keep an eye out on our social media as well, because we'll post anything on there. And yeah, just keep your head up and carry on. And thanks. Yeah, I think that's it. Thank you very much, and have a good rest of your day.